All right, I'm sure everybody has seen at this point the thumbnail, and I know last week we went over the Ameris Bank case that was brought to them through the USA versus Ameris Bank case, where they were in fact forced to settle due to their redlining case. And again, redlining is an illegal activity, an illegal practice where lenders um, discriminate and pretty much target those of communities that are black or non-white. But the ultimate goal is to discriminate any lending, any credit opportunities to targeted communities based on race, color, and national origin. That's redlining. And historically, they drew a line. They created maps. Again, we're not going to get off of this, but they created maps. The Homeowners Loan Corporation, headed and led by President Franklin Delano Roosevelt, hired examiners who partnered up with mortgage loan originators, realtors, and appraisers, and they created what was called residential security maps. And in those residential security maps, they created a legend, which let me share this here, where they graded out different areas. A was green, B was blue for still desirable. A was green for best. B was blue for still desirable. Yellow was the C group, which was definitely declining. And D, which was red, was the hazardous area. And those areas were black and non-white communities. And it was a headed and targeted effort through the homeowners loan corporation, which was terminated, and redlining was outlawed in 1968. However, we still see, even though it was banned, that there are still practices of it going on. And today we'll be diving into the mortgage firm versus the Department of Justice versus the mortgage firm. And I'll be breaking down the case. I believe it's about 26 pages or so. But we'll get through as much of it as we can, because we do want to bring awareness to any sort of housing discrimination, lending discrimination, especially as it pertains to redlining, which is something that's been outlawed rather, for a number of years. But the remnants of it and its long-lasting effects still goes on today, and it's something that has decimated black and non-white communities for a long time. And its agenda, like I said, which was set up by the Homeowners Loan Corporation back in 1933, its agenda was to do that. And I do want to give kudos, if you will, to the Department of Justice for bringing awareness and bringing these cases up and ensuring that they are upholding, to some extent, they're upholding the law that was set up by the Fair Housing Act and the Equal Credit Opportunity Act. And there are some articles that I wanted to get into first. So let's take a look here as it pertains to the mortgage firm versus the Department of Justice, or well, let me say it correctly: the Department of Justice versus the mortgage firm. But let me take a look into some of the articles that were pulled up here, so we can take a quick look at it. All right. So as we have here, and this article is brought to you by the Department of Justice. Justice Department secures third settlement with a non-depository mortgage company to resolve redlining claims. And what a non-depository mortgage company is a company that pretty much exclusively lends mortgages out. So they're not like a bank, such as your more traditional banks like a Wells Fargo or Chase Bank, where they do credit cards, where they do auto loans, where they have bank accounts, credit card accounts, money market accounts, business accounts. Non-depository mortgage company exclusively lends mortgages. So you would reach out to them to get a mortgage, but you wouldn't reach out to them to get a car loan. Typically, you're not going to reach out to them to get a bank account, checking account, savings account, any sort of a business accounts. They exclusively deal with mortgages. Just so you're aware of what a non-depository mortgage company is. So they lend mortgages. They exclusively deal with mortgage loans. You don't have the 300, 400, $500,000 in the bank to buy the house. You reach out to a mortgage company and they'll give you the money to purchase that house. or refinance that house. So just to give you a brief tidbit there, and again, like our foundations are, is in order to get qualified for a mortgage, there's four pieces to that puzzle: income, property, assets, and credit. Those four pieces do need to be completed in order to get a mortgage loan approved. And in order to do that, you must do a mortgage loan application, known as a 1003 or a uniform residential loan application. And a lot of these redlining cases are based around and centered around the lack of or low numbers of mortgage applications being performed in these areas that they were targeted from the HOLC's redlining maps. And a lot of it is also based on the lack of closings or marketing towards these areas as well. So not marketing that you have mortgage loan officers, mortgage companies in their communities, that also is avoiding giving them the opportunity to mortgage or get home ownership or refinance relief. You're literally, due to not giving them that opportunity, to not letting them know that you're in the area and that you can help them, that also is a form of redlining. If they see that you are doing it in other areas that historically have been predominantly white areas, predominantly non-black areas. If they see that, and they, I mean, the Department of Justice or the CFPB, the Consumer Financial Protection Bureau, ECOA or FHA, if they, any of them see that you're not marketing to those areas, you're not providing, you're doing anything other than giving them a fair chance at equal credit opportunities, then you can fall in that boat of redlining. And it looks like that is what we have as the case as far as the mortgage firm, the Mortgage Firm Inc. But just to go into the article, as we see, Tuesday, January 7th, 2025. So this is very recent. This is from 1933. The Justice Department announced that the Mortgage Firm Inc., also known as the Mortgage Firm, agreed to pay a 1.75 million dollar settlement to resolve the allegations that it engaged in a pattern of practice of lending discrimination by redlining predominantly black and Hispanic neighborhoods in the Miami, Fort Lauderdale, West Palm Beach, Florida metropolitan statistical area, otherwise known as the Miami MSA. So again, we're still here in Florida, like I said, the home of the Seminoles. So we're gonna go city to city. So take your time. We'll be going city to city. However, redlining is an illegal practice, like I said earlier, by which lenders avoid providing credit services to individuals living in communities of color because of the race, color, or national origin of those residents in those communities. So that's avoiding giving any credit services to them, which includes mortgages. And the reason I do uh, focus on mortgages is home ownership is the fastest way, and in most cases the easiest way, that Americans can generate generational wealth, generational income. You may not have $100,000 in the bank, but if you have $100,000 of equity, which is ownership in your home, you can reach out to a mortgage company or a bank or lender and leverage that equity. You can pull against that and take a loan out against that. Well, in redlining, the ultimate goal by banks and lenders who do this is to ensure that certain areas, particularly black and non-white communities, are not able to get those loans, are discouraged from getting those loans. So that's why this is a big deal, because it has a lasting impact today. And as some may be aware or may not be aware, in the Miami Fort Lauderdale area, there are the areas that were labeled hazardous, where they were encouraging the appraisers, the realtors, the mortgage companies, the banks not to lend in those areas are still hazardous today. They're still in the red zone today. They still don't have that wealth. They, in fact, have a lot of decreased values in their homes. They do have a lot of economic impacts as far as hazardous plants, waste plants being placed there, food deserts, you name it, has all been a trickle down effect due to the redlining that was set up in 1933 by the Homeowners Loan Corporation. So we're going to dive into what the mortgage firm did and why the Department of Justice saw it fit to file a complaint, which we'll be going over that court case today. But they filed a complaint against them for redlining, which again is the practice of avoiding providing credit, and in most cases, mortgage credit, mortgage opportunities to those that are living in the hazard zones from redlining, based on their race, color, or national origin. So again, here, non-depository institutions, including mortgage companies, are now originating a higher share of loans to home buyers than banks and credit unions. So right now, the mortgage lenders who exclusively deal in mortgages, they're actually doing the most, which makes sense because they're not doing bank accounts, savings accounts, checking accounts. So it makes sense that they do more mortgages than your traditional bank, than your traditional credit union. And this information, this quote here is from the Attorney General, Kristen Clark of the Justice Department's Civil Rights Division. All right. With this trend comes the obligation to ensure full compliance with our federal laws that prohibit redlining by denying predominantly Black and Hispanic neighborhoods the greater Miami area access to credit. So they're saying the mortgage firm was doing that. And the mortgage firm violated the law, denied communities equal access to credit, and exacerbated the racial wealth gap. The settlement will provide impacted communities in Miami with expanded access to home ownership and makes clear that no matter the type of financial institution, bank, credit union, or mortgage company, the department is committed to rooting out redlining across the country. And that's a good thing. That's a good thing. As there should be a commitment to outlawing redlining. I mean, it was banned way back in 1968. So it really is disheartening to see that it's still something that's going on today, and a lot of it is still based and rooted from the maps that were created from the homeowners loan corporation. Like I said, it's from right here on the map legend. And just to kind of, I'm going to bring up another map here. Let me see if I can bring it up. Let me stop sharing. And here's a map that I thought was interesting. But like I said, it went city to city when the HOLC created redlining. They went from city to city creating maps and drawing red lines. As you'll see, some of Miami folks here that may be in. I know I have some folks from Florida that do hop on from time to time. So you'll see where the Liberty City area is in the red zone. Overtown, which was another affluent Black community, affluent, but they said that they were hazardous. So that lets you know that that was a targeted effort to ensure that they did not get any sort of economic relief. They didn't get any opportunities for refinancing, and realtors were, based on this map, were encouraged, or if not encouraged, instructed to steer any home buyers from going into these targeted communities. And they have them labeled as hazardous, so everybody knew. It was like a coded language. These were areas you stayed away from, even though at the time, especially in the 30s, these were affluent areas. And due to these maps is why you see them run down at this time, why you see the blight, why you see the crime, why you see all the things that are non-constructive going on in these areas. Liberty City, Brownsville, like I said, Overtown, and we can go on and on. But these historic neighborhoods that were once affluent and abundant are now ridden with crime. Like I said, food deserts where they don't have opportunity to proper and adequate health care, where they have freeways, which is a part of the plan as well. Freeways, I-95 ran right through Overtown, decimated that county, decimated that town, decimated the affluence there. And by them setting up these maps, it laid a foundation, or what I call the establishment, for banks today to maintain, expand, and refine if they are choosing to go down by breaking the law, which it looks like the mortgage firm was accused of and charged with here in this case. So just so you can take a look at the maps, this is from the 1930s here on the left. And again, you see the legend. A is for best, B is still desirable, C is definitely declining, and D is avoid at all costs because it's hazardous. And D is where you see all the red lines here in the red areas. These were your predominantly Black and non-white communities, as you can see. All right. So it's not something that I just like to talk about. I like to bring the receipts along with it. And with that being said, I did want to kind of go back to the article. Then we'll go over what everyone came here for, which is the breakdown of the case, the complaint that was filed by the Department of Justice. So let's bring up the article real quick. And well, actually, before I bring that article back up, I did want to kind of go over this map just so we can expand it. But you see a redlining map of Miami in 1935. And here you have the legend. This was established by the HOLC when they worked with they also worked with the Federal Housing Administration, but they worked with loan officers, realtors, and appraisers to ensure that they were not to lend or provide any credit opportunities to anyone living in the hazardous area. They weren't to give any credit opportunities to anyone living in those areas, which is very unfortunate, but it's not something that anyone needs to, anyone needs to not bring awareness to. So it's not that we're throwing any dirt or anything towards the government per se, but if you don't know your history, it's bound to repeat itself. So as you can see, let me see if I can blow this up. Yeah. All right. So as you can see here, even back then they have the street map Greater Miami. All right. And here's the legend, and this is what it looked like at the time. You see, and we'll zoom in here. Green, A, best. Blue, B, still desirable. Yellow, C, definitely declining. Red, hazardous. And then they have they even have a label for Negro concentrations. This is how focused they were on lending discrimination, that they broke down Negro concentration. Out of everything they could break down, look here: industrial, commercial parks, playgrounds, schools, golf courses. And they were concerned about Negro concentrations as well, mapped it out on the legend. And anyone who knows about maps, the map legend is what helps you understand the breakdown and the reason and purpose for the map. All right. And so the purpose here was to break down the areas where the parks were, where the industrial zones were, where the playground, schools, cemeteries, and also they wanted to know where the Negroes were. Very interesting, huh? This is in 1933, I believe. No, 1937. All right. And as you'll see right along the Miami River, which separated the Negroes from the non-blacks at the time, and it's still broken down like this today. I mean, you have some spill over here, but the Miami River really was that barrier, as you see, Miami River, and it's going up here. And here, I believe we have Overtown over here. If I'm not mistaken, I think Liberty City is somewhere up here in this area. All right. And these zones are still red today. Still today. This was set up in 1937. This was a targeted agenda to ensure that those uh, blacks and non-whites that lived in these areas were choked out of economic growth and being able to generate generational wealth through home ownership by avoiding providing any mortgage opportunities to anyone that lived in these areas. And like I said, the case we're going over today says that the mortgage firm participated in doing that in 2025 when they brought this complaint against the mortgage company. The Department of Justice brought up this complaint against them, which is very interesting. Hold on, give me just a moment. Give me just a moment. Okay. Sorry about that, everybody. I got some folks trying to get the link to the stream, which is a good thing. But I'm not the most technology savvy person, so I kind of got to pause so I can pull it up and send it to them. I'm sorry, I'm not as good as some of y'all at this. Alrighty. And let me send one more and then we'll get back to it. Um, while I am doing that, I think it would be constructive if you all can take a look at this map legend and be able to digest some of that. Alrighty, so I just sent out a couple of links out to some folks who may be joining us here. I know typically the lives don't get a lot of traction, but as you'll see on our playbacks, we do get a few hundred views here and there. But the ultimate goal is to be constructive and to also provide the mortgage literacy, which is something that everyone should need in their life. Because let's keep it real, the easiest way to generate um, generational income, generational wealth is through home ownership. That's the easiest and fastest way. I know you'll hear a lot about crypto, stocks, and bonds, but real estate investment and particularly home ownership is going to be the fastest way your average American can generate income. Like I said before, if you don't have 100, 200, $300,000 in the bank, but you do have that ownership, that equity stake in your home, you'll be able to generate that wealth by just reaching out to the bank to be able to get a refinance, to be able to get a home equity line of credit, where you can now have that money in the bank, where you can put a down payment on another home, where you can do home improvements on your current home, maybe add a garage, add a basement, add another or extend your driveway, pool, fix your roof, you name it. You can do a lot of things when you have equity built up in your home, and equity is just ownership stake. So if your home you purchased for $150,000, 7 years later it's now worth $550,000. That's your equity. That's your ownership stake in the home. And what redlining did was ensure that banks avoided allowing blacks and non-whites the opportunity to leverage that equity, to grab that. They, in fact, work with appraisers to lower the values of homes. And like we'll be going over today, the mortgage firm was actually accused by the Department of Justice of practicing that today, which was abolished in 1968. Redlining was abolished. And here's the map for your reference. And we'll also pull up the map here. We went over Jacksonville last week. Today we're going over the greater Miami area. And here in 1937, this map was created to redline those in Miami. And as you see where it's red, these were the neighborhoods of blacks in the time. And in these areas, they were avoiding any mortgage opportunities and any home purchase opportunities. And in fact, these areas today now have food deserts. They have hazardous waste plants, hazardous healthcare today. So these maps that were set up back in the 30s still have lasting impacts almost 100 years later. And the Department of Justice was able to pick up on that. They noticed that and actually filed a complaint case against the mortgage firm, which we're going to go ahead and bring that up now so everybody can see the complaint. And we're going to go over the case so you can know about housing and lending discrimination. So as you see here, this court docket was filed January 7th of this year, 2025. It's a 21-page document or docket rather. And I'm not sure if we'll be going over every piece of the case, but we're going to get through as much as we can to ensure that there's understanding and mortgage and financial literacy around lending discrimination and what redlining is. But as you see here, the United States District Court, Southern District of Florida, and you have the United States of America, super scary here, versus the Mortgage Firm Incorporated. All right. So the complaint that's outlined here is the United States of America, which will be referred to as the United States, brings this action against the mortgage firm under the Fair Housing Act, not to be confused with the Federal Housing Administration, FHA. In this docket, it'll be the Fair Housing Act when you see FHA. All right, so two different firms. Federal Housing Administration is a government agency that sponsors mortgages for banks and lenders. The Fair Housing Act is an actual act, a law. Well, it's an act, not a law, but an act that's put out there to ensure fair housing is being conducted by any credit providers, any creditors. So that includes banks, credit unions, mortgage lenders. And the Equal Credit Opportunity Act, again, another act to ensure that equal credit is given to anyone across the board. These were brought in play in the 60s, I believe 1968, to ensure that, as you see here, that there's a remedy for discrimination as it pertains to lending. So getting back to the docket here, the Mortgage Firm Inc. under the Fair Housing Act, the Equal Credit Opportunity Act, and the ECOA's implementing Regulation B to remedy discrimination in the mortgage firm's residential mortgage lending. The FHA and ECOA, this is what we call it in the mortgage industry. We call it ECOA. We don't all just say the Equal Credit Opportunity Act. So just so I can bring everyone up to speed, the FHA and ECOA prohibit all creditors from discriminating in home loans based on the basis of race, color, national origin, or other characteristics. Redlining is one type of discrimination prohibited under the FHA and ECOA. Redlining occurs when lenders discriminate loan applications, deny equal access to home loans and other credit services, or avoid providing home loans and credit services to neighborhoods based on race, color, or national origin of the residents of those neighborhoods. From at least 2016 through 2021, which they're referring to as the relevant period, the mortgage firm engaged in a pattern of practice of unlawful redlining. As alleged in detail below, the mortgage firm avoided providing home loans and other mortgage services in majority Black, Hispanic neighborhoods and high Black and Hispanic neighborhoods in the Miami, Fort Lauderdale, Pompano Beach, Florida Metropolitan Statistical Area, otherwise known as the Miami MSA. All right. Throughout the relevant time period, the mortgage firm's redlining practices included locating and maintaining nearly all its Miami MSA offices and its loan officers in majority white neighborhoods and avoiding having offices in or having officers serve majority and high Black and Hispanic neighborhoods. So this is in 2000, from 2016 to 21, that they were avoiding any having a branch there or doing any sort of business in majority Black non-white areas. So this is despite the fact 64% of the residential census tracts in the Miami MSA area are majority Black and Hispanic, and 36% are high Black and Hispanic areas. The mortgage firm also concentrated its outreach in majority white neighborhoods and failed to conduct outreach, marketing, and advertising of mortgage services to majority high Black and Hispanic areas, including by failing to train or incentivize its loan officers to compensate for its lack of offices in majority and high Black Hispanic areas. So again, like I was talking about earlier at the beginning of the stream, that in order to conduct if you're avoiding marketing in these areas, that too is redlining, because you're preventing them from having the opportunity to know that they can get a mortgage from your bank in this area. By not having any branches in the area, that is also redlining, because you're avoiding doing business in those areas, and that is actually against the law. So everyone does need to pay attention to that. Pay attention if banks are advertising any mortgage lending in your areas. Pay attention to how many originations they're doing in your areas. Like I said, you can go on the NMLS Consumer Access website and see this, because a lot of folks don't know, like we talked about on the Ameris Bank case, where they originated 0 loans in these areas in Jacksonville. They didn't do one mortgage. They never had a branch in any of those zones that were labeled as hazardous from those residential security maps, the racial discrimination maps. They didn't have one branch in those areas in Jacksonville, and they didn't conduct one loan. And that was over, I believe, a 6-year period where they didn't do any business in Black and non-white areas. And that was Ameris Bank. And it looks like the mortgage firm is in the same category here. And here we have in good old sunshine state of Florida. They're not doing much business. They're not doing any marketing. They're not doing any advertising. They're not doing any outreach to let those that are in these Black areas know that there are actual mortgage opportunities, that they can buy homes, that there are programs for first-time home buyers. There are 0 down payment programs. They're not letting them know about any of that. That's illegal. It's against the law, and the Department of Justice has brought them to the task for this and filed a complaint against them, which, as you saw on the article we were going over before we started the case, they had to settle $1.75 million for doing these actions. All right, so let's go on to line 6. As a result of these practices, the mortgage firm generated disproportionately low numbers of mortgage loan applications and home loans during each year in the relevant time from majority and high Black and Hispanic neighborhoods in the Miami MSA, as compared to similar situated lenders. So compared to other banks and lenders, they were disproportionately lower. All right. The mortgage firm's conduct and practices were intended to deny and had the effect of denying equal access to home loans for those residing in or seeking credit for properties located in majority and high Black and Hispanic neighborhoods, and discriminated against, including by discouraging applicants to prospective applicants from applying for home loans on the basis of race, color, and national origin of residents in those neighborhoods. Again, this was January of this year. This wasn't 100 years ago. This is something that's going on right now. See, most of the folks are unaware that banking and finance is what dictates a lot of policy that goes on. They'll tell you a lot about tech, they'll tell you a lot about healthcare, but all of those require a bank to give them a loan. All the politicians require the bank to grease palms at times. So a lot of this discrimination is hidden behind some of the practices that these banks and lenders go about doing. So you have to be aware of what's going on in the finance side of things, because that drives politics, that drives economics. And for, like I said, most Americans, a house is their biggest asset they have. So pay attention to where your biggest assets are, what's going on in these arenas. All right. And as you see from the mortgage firm, it says they discourage applicants. They were discouraging them from applying for home loans, discouraging them. So number 8, the mortgage firm's conduct was not justified by legitimate, non-discriminatory reason or business necessity, and was not necessary to achieve a substantial, legitimate, non-discriminatory interest. So they can't use the justification of, well, this is just what was best fit for business. No, this was targeted and you avoided credit opportunities. Jurisdiction and venue. The court has subject matter jurisdiction over this action because it presents a federal question. Is And this is the case 28 USC is brought under federal laws and 15 USC and is brought by the United States. Venue is proper in this court under 28 USC and 12 USC because the mortgage firm conducts business in and a substantial part of its events or omissions giving rise to the claims occurred in this district. Parties: the United States brings this action to enforce FHA and ECOA. The FHA and ECOA authorize the Attorney General to bring a civil action in federal district court whenever he has reason to believe that the entity is engaged in a pattern or practice of resistance to the full enjoyment of rights secured by the FHA and ECOA. Again, just like we went over with the Ameris Bank case last week, anytime you see where the DOJ is getting involved, it's because the Attorney General has seen a red flag, typically from the mortgage call reports. Remember, we talked about that. Each bank has to submit mortgage call reports to the NMLS. They have to send a mortgage call report, and that discloses. It's a HMDA requirement, HMDA requirement, Home Mortgage Disclosure Act requirement. They must send in all their reports on where they did mortgages at, the loan amounts, the property values, all the way. They have to go over all the demographics and they submit that. And if they see a red flag where you're only doing loans in one area, you're only doing marketing in one area, that'll alert the Attorney General, and then they'll launch an investigation. And if it looks like you are doing it, looks like a duck, quacks like a duck, it is a duck. And a lot of banks have been going along with this, and more in particular, mortgage lenders. They've been running wild with this for a long time. I'm very shocked, but somewhat satisfied to see that the Department of Justice and the CFPB is actually cracking down on this, because this is something that's been going on since the 30s. We're talking about nearly 100 years that these actions have been going on. And it's about time that they are being brought to justice, because if I'm going to keep it real, this is disgusting. This is disgusting. It's diabolical, as they say now. It's diabolical. But the FHA authorizes the Attorney General to bring suit where the defendant has denied rights to a group of persons, and that denial raises an issue of general public importance, which this is definitely an issue. Because as you see, these maps are still the same today. These areas and neighborhoods that they avoided lending and devalued the properties and put all these hazardous waste plants and took all the healthcare opportunities and transportation opportunities out. As you see today, they're still living those impacts. They're still feeling that right now. So it's about time that there's being awareness brought to this. So number 12, the mortgage firm is a mortgage company or a non-depository institution incorporated in Florida since 1995, with offices across Florida and southeastern United States. As a part of this complaint, the mortgage firm is licensed to originate mortgage loans in 18 states. The mortgage firm is an S corporation with no parent company, subsidiaries, or affiliates. Several of the mortgage firm's offices operate under aliases, but the aliases are not separate legal entities or subsidiaries of the mortgage firm. From 2016 through 2021, the mortgage firm originated mortgage loans secured by 1 to 4 family properties. A significant percentage of the applications the mortgage firm generated during the relevant time period came from the Miami MSA. So they're that Miami, Fort Lauderdale area that they're calling the Miami MSA, that's where the bulk of their business was being conducted. That's what I'm sure brought up the red flag for the Attorney General. If most of your business is coming from this area, however, you're only doing business with white applicants in white areas, then yeah, it's going to draw some attention, because how is most of your business coming from here? But as you saw, 65% of the area is predominantly black or non-white. So how is their numbers not mirroring what the demographics of that area is? The numbers aren't mirroring that. All right. So where were we here? 15. The mortgage firm is subject to the FHA, ECOA, and their respective implementing regulations. And Regulation B. The mortgage firm is a creditor within the meaning of ECOA and is engaged in residential real estate related transactions under the Fair Housing Act. And that's why they're being investigated, because they are involved and engaged in doing residential real estate transactions. So that means you have to follow the guidelines, the rules of the Fair Housing Act. Same with the Equal Credit Opportunity Act. All right, factual allegations. The Miami MSA, the Miami MSA is the basis for the United States allegations. The Miami MSA comprises 3 counties in Florida. That's Miami-Dade County, Broward County, and Palm Beach County, which correspond with 3 metropolitan divisions. The mortgage firm treated the entire MSA market as its market area and did not differentiate this market area by county. So they lumped all 3 counties into one and said, this is our Miami area. And they lumped in these 3 counties. As of 2019, the total population of the Miami MSA was approximately 6.1 million, of which 20% of the residents identified themselves as Black, non-Hispanic, 45% as Hispanic, 30% as white, non-Hispanic, and 2% as Asian. And we went over this last week, but you have white Hispanics, and then you have white non-Hispanics. You can also have Black Hispanics like Sammy Sosa or Yasiel Puig. Those would be considered like black Hispanics. Then like your Canelo Alvarez, he would be considered a white Hispanic, but he would label himself as a white Hispanic. All right, so here, the Miami MSA comprises 1,200 census tracts, of which 770 or 64% are majority Black and Hispanic. And that's what happened when they lumped in those 3 counties. So once you lump those 3 in, now 64% are Black and Hispanic, and 369% or 369, which is 31%, are majority white. So once you lump them in, the majority of your area is Black and Hispanic. Of the 770 majority Black and Hispanic census tracts, 432, which is 36% of the 1,200 tracts in the MSA, are high Black and Hispanic areas. All right. These majority and high Black and Hispanic census tracts are concentrated in Miami-Dade County and Broward County. Of the 770 majority Black and Hispanic census tracts in Miami, 466, which is 60.5%, are in Miami-Dade, 206 are in Broward County, and 98 are in Palm Beach County. Of the 432 Black and Hispanic census tracts in the Miami MSA, 346 are in Miami-Dade County, 56 are in Broward County, and 30 are in Palm Beach County. All right. On March 11th, 2022, the Consumer Financial Protection Bureau made a referral to the Department of Justice after obtaining evidence that the mortgage firm had violated ECOA and Regulation B by intentionally redlining minority neighborhoods in the Miami MSA by engaging in acts or practices directed at prospective applicants that would discourage reasonable people on the basis of race or national origin from applying for credit. On May 31st, the United States informed the mortgage firm that it had initiated an investigation into potential lending discrimination by the mortgage firm in violation of ECOA. Okay, so here they're breaking down the mortgage firm received disproportionately low numbers of residential mortgage applications from majority and high Black and Hispanic neighborhoods. And again, we see a pattern, because this was the same pattern with Ameris Bank, just very low numbers when it came to applicants altogether, which is a red flag that you're discouraging those or avoiding even getting applications. It's one thing that you're just denying folks in these areas, but to not even take an application, that, I mean, that is very nasty work. That's very nasty work. But on 23, within the Miami MSA, the mortgage firm's pattern of lending during the relevant time periods demonstrates a focus on majority white areas while disproportionately failing to serve majority and high black and Hispanic neighborhoods as compared to its peer lenders. The mortgage firm's policies and practices alleged herein, including the concentration of nearly all its offices, loan officers, marketing, and outreach in majority white neighborhoods, have discriminated against applicants and prospective applicants in majority and high black and Hispanic neighborhoods in Miami MSA, including by discouraging them from applying for and ultimately obtaining its home loans. The mortgage firm's own data on loan applications and originations that it is required to report to regulators under HMDA, Home Mortgage Disclosure Act. See, I was just talking about this. Confirmed that mortgage firm avoided serving majority and high black and Hispanic neighborhoods in the MSA area. See, when you're sending those reports, it has the demographics. It's just a matter of time as to when the feds decide to open it up and see what you're doing about it, where you're serving, how you're handling the communities you say that you're serving. And they'll give you time to hang yourself. As you see, this was from 2016 through 2021, but this court case was filed January of this year. From 2016 through 2021, the mortgage firm significantly underperformed its peer lenders in generating home mortgage applications from the majority and high black and Hispanic neighborhoods in the Miami MSA. The mortgage firm's peer lenders are financial institutions that receive between 50 and 200% of the mortgage firm's annual volume of home mortgage applications. The disparity between the rate of applications generated by the mortgage firm and the rate generated by its peer lenders from majority and high black Hispanic neighborhoods in the Miami MSA is both statistically significant, meaning unlikely to be caused by chance. And I'm a firm believer there's no such thing as coincidence. And the numbers show that this wasn't by chance. This was a targeted agenda. And all right, meaning unlikely to be caused by chance and sizable in every year from 2016 through 2021. Let's scroll down a little more. Specifically, of the 9,375 HMDA, the HMDA reportable mortgage applications, the mortgage firm generated from 2016 through 2021 in the Miami MSA only 2,852 or 30.4% came from residents of majority black and Hispanic neighborhoods. By contrast, during the same time period, the mortgage firm's peers generated 59% of their HMDA application from these same majority black Hispanic neighborhoods. And that is a pretty huge gap there. Talking about 60% versus 30%. That's a pretty huge gap. The mortgage firm's application data reflects the near exact inverse of the demographic makeup of the Miami MSA, where 64% of the census tracts are majority black Hispanic and 31% are majority white. Whereas during the relevant time period, about 63% of the mortgage firm's mortgage applications came from majority white census tracts, and only 30.4% came from the majority black and Hispanic census tracts. And I know some folks are out there saying, well, a lot of people in those areas don't qualify. That's why you see that. And here's where having that mortgage literacy matters, because it's not that they don't qualify, it's that they're not taking any applications to even determine if they qualify. Because a lot of times, and with my 15 years experience in this industry, you can take an application and find out that they may only not qualify by one thing or a couple things. Again, income, property, assets, and credit are the four pieces of that puzzle to complete your loan application. And a lot of times, folks, their qualifications may just be on income, but there could be a matter of just adding a cosigner, and now they qualify. But you'll never know that if you don't take the application to begin with. And that's the problem with the mortgage firm right here in this complaint, is that they're not even taking the application. And see, if you just take applications, then it's harder for them to say that you're doing this intentional. You can say, "Hey, man, I took the applications; they don't qualify," but you can't say someone doesn't qualify when you're not taking the applications to begin with. And when we take a look and you see there's a 30% gap in just taking applications, then that does go to show that there's some sort of avoiding going on, avoidance. This is avoidance. So you're avoiding doing business in an area that you claim is your bread and butter area. It's your cash cow area. And the demographics say 64% of your cash cow area are blacks and non-whites. However, you're not serving that community. What gives? And that's why the Department of Justice has brought this complaint upon them and filed this case where they had to settle 1.75 million for maintaining, establishing, and refining the HOLC's establishment of the redlining maps back in 1934, which was headed by President Franklin Delano Roosevelt's New Deal program that they set up to provide provide homeowners relief from mortgage programs, while at the same time, simultaneously creating red line maps to ensure that the blacks, because a lot of those areas were black wall streets, city to city, to ensure that they were not given any opportunity to do that. And briefly, and I'll get back to the case. Remember, we went over the article that ultimately showed the map that they have right here in Miami. And last week we went over to Jacksonville, the Duval County redlining map. But again, this was the street map of Greater Miami. And I'm going to bring up the article we were just looking at, because it's very interesting that the government was very, very dialed in on where the Negroes were at the time. Not this article. I put up the wrong one. Hold on. Because it was even in the map legend back in 1937. The map legend actually showed like where the Negroes were concentrated. And I thought that was very interesting. Yeah, here, this map. So as we zoom in, here was the legend. Like I said, the legend is to focus on the purpose of the map. And as you see, this was the redlining map back then. And anywhere you see where it's red is hazardous, which was code to tell realtors, mortgage loan officers, and appraisers to avoid lending here. And there's a practice in realty called steering, which is also illegal. To steer anyone away from particular neighborhoods is illegal. However, this was headed by the president and the Homeowners Loan Corporation in the 30s to do it. So as you see, Negro concentrations. They don't have whites. They don't have any other race, but Negro constant. They were very focused on where the Negroes were at and the areas they lived in. The Black Wall Street, city to city, they labeled as red or hazardous. And as you see, this box in where the Negro concentrations were at, right here, and they're all red. All right. They boxed them in so they could see, and it would help the realtors and appraisers know. This would help them know. And as you see, there's a divide here from the Miami River that kind of separates it. You had some spillover over here, but this was primarily the divider. Green was for best. And as you see, these are all the beachfront properties. This was in the best. No red here. This was in still declining, the yellow areas. All right. And this is a real official map. Okay. As you see, Miami Beach. You don't see any red over here. None of this good beachfront property. No red. No red. None. Blue and green. Okay. Blue and green. Green is best. Blue is still desirable, as you can see here outlined in the map. All right. You see that? Red, stay away. Avoid lending because it's hazardous, or as they say. But as you see, everything along the beach. See, this was a design program. This was designed. And it's crazy work to see that the mortgage firm, and as we saw last week, Ameris Bank, are still conducting business the same way. They're maintaining, expanding, and refining these maps right here. These are the same areas that they avoided lending to. And as you see in this, in Miami, which is a smaller town, it's smaller than Jacksonville. A lot of folks don't know that. They don't know Jacksonville is the biggest city in the United States land wise. So it's a lot smaller than Jacksonville. And as you see, the majority is red because it's a majority black, non-white city. The majority is red. And even when the majority of their town was red, they avoided lending to almost everybody. More than half of the folks they avoided lending to in the 30s, and the mortgage firm is avoiding lending to them today. So much so they had to settle for $1.75 million, which these folks in the red community, they're not going to get that money. They're not giving them that education. So that's why I'm here, so they can reference this. So share this video. Please like and share it with anyone you know so they can get the education, because I'm going city to city. We're going city to city so we can show what's being done. This was established by the Homeowners Loan Corporation in the 30s, almost 100 years ago. And there's cases upon cases that are going on today, city to city. And as you'll see, we're going through the histories of these cities. And they were choked out of economic relief in the 30s, and they're still being choked out of it today. There's no branches in these areas. The majority of your city is black and non-white, and you don't have one branch in their areas. You're not taking any applications in those areas. That is diabolical. Crazy work, nasty work, disgusting work. Disgusting. Look at this. Today, these areas still look the same way. Today, blacks aren't in high numbers in Miami Beach. This is Miami Beach. Over here, this is like Liberty City right here. Brownsville's like right here. Overtown, which was a Black Wall Street in Miami, is like right here. This was like Overtown. Oh yeah, we're gonna break it down. We're gonna break it down. We're gonna break it down. Oh yeah, I know reading over some of the court cases can be a bit exhausting, overwhelming, but this is education that people need to know. Like I said, mortgage literacy, financial literacy is very important. And knowing your history is very important as well. So that way you can ensure it doesn't repeat itself. Like I said last week, many blacks have had to hear, I know I've heard it a lot of my lifetime, that, when slavery ended, we were just some goofballs that been sitting around waiting for a handout. Not at all. Not at all. The reason that they put red in those areas on these maps was to avoid giving these areas any economic growth opportunities through home ownership. Okay? Because home ownership is the fastest way to pass down generational wealth. And if the government has teamed up with appraisers and realtors and mortgage bankers to create maps to avoid where to lend to people, and they're devaluing your property, how are you going? If you, like we saw in the Marist Bank case last week, in the Sugar Hill neighborhood, which was a Black Wall Street, home of the first black millionaire in the state of Florida, Abraham Lincoln Lewis, who owned the Afro Life Insurance Company, who founded American Beach. As you saw, they had the first library in Jacksonville. They had a community center that was at the time the largest in the state of Florida. That community center had a place where they hung out at on the weekends. It had a library, it had a hospital with a 92 bed unit hospital and a school of nursing at that hospital. It was also home of the Cookman Institute, which is now Bethune-Cookman University. But due to redlining and devaluing all the properties and running a freeway through called I-95, running it through their community and demolishing everything, they had to move Bethune-Cookman to Daytona. Okay. So knowing your history is important because Sugar Hill is where 8th Street is. Notorious 8th Street, Moncrief. Those are all Black Wall Street areas home to millionaires with an S. And the same with Overtown, which I'll be doing a breakdown of Overtown and how it was a very affluent area with a lot of Black entrepreneurs. See, these towns were not always crime ridden, they were not always food deserts. They were not always safe havens for debauchery and non constructive activities. No, these were affluent places, and these maps here, they were aware of that. So they did everything in their power to make sure they could devalue the properties. And that's commercial properties and residential properties in these areas. They did everything they could to avoid lending to them and to devalue them, and ultimately to run freeways through these areas, which gave them what they call eminent domain to demolish and destroy these areas for the betterment of the United States of America, is what they were saying. That the super freeways were so needed to go through your community that we got to demolish that hospital, the Brewster Hospital in Jacksonville. We have to demolish the Wilder Park, the baseball fields, and the Afro Insurance Life Company. We got to pretty much run everything through 8th Street. They said they had to do that. And we'll break down what they did in Overtown as well. We're going to break that down also. But I just want to give y'all a little bit breather. I know it can be a little daunting when you're looking at the court paperwork, and I'll probably read like a robot, so that may not be the best thing when it comes to that. So I just want to give you a breather, but also get back to the case and go over that article that we were looking at earlier, right? Because it is very important and impactful to know that not only was the court case and filing available, but the Department of Justice even put together an article about it. And they talk about how they had to do the settlement and the consent order. All right. So I know we briefly touched on it earlier, but just so you can get a feel of the Department of Justice, they're headed by they're not headed, but the U.S. Attorney General Mackenzie LaPointe for the Southern District of Florida was in on making sure that she launched efforts to protect what they call civil rights. Um, the mortgage firm is a non-depository mortgage company, and they're headquartered in Altamonte Springs, Florida. And again, a non-depository mortgage company is a mortgage company that exclusively handles mortgages. So they're not like your Chase banks or Wells Fargo, your traditional banks that may do savings accounts, checking accounts, auto loans, business accounts, and they have a whole portfolio of different options. Mortgage companies that are non-depository, they exclusively just deal with mortgages, refinances, and purchases, and that's pretty much it. Maybe some home equity line of credits, but you wouldn't go to a non-depository mortgage company to get a bank account or to get an auto loan or to open up a savings account. You wouldn't go there for that. You only go to them for mortgages. All right, so they proposed a consent order, but at this point, it looks like the consent order has been completed because a settlement was rendered. But here you'll see the conduct. They had to conduct a community credit needs assessment, which is to identify the credit needs of the residents of predominantly Black and Hispanic neighborhoods in the Miami MSA, and to consider the results of that assessment to develop future loan programs and marketing campaigns and outreach efforts. Provide 1.75 million for a loan subsidy program to offer affordable home purchase, refinance, and home improvement loans in predominantly Black Hispanic neighborhoods in the Miami MSA. The program may provide lower interest rates, down payment assistance, closing cost assistance, or payment of initial mortgage insurance premiums. So, like I said, we'll be going city to city, but any city in any area where they've been ordered, like here in Miami, to provide these types of programs, we're going to make sure we're doing our due diligence to hold them accountable for this. Because this is a court order that they're supposed to be providing lower interest rates to Black folks. See, it's right here. The program may provide lower interest rates, down payment assistance, closing cost assistance, or payment of initial mortgage insurance premiums. So, if you have less than 20% down or less than 20% equity in your home, you have to pay what's called a mortgage insurance premium. All right. And it's not to insure your home, it's to insure the bank. It's a fee that you pay, which I just call it interest because interest is a fee you pay the bank, but it's a fee you pay for being a risky borrower, for not having 20% ownership in your home. They consider you risky as it pertains to your property because your loan to value ratio is risky. You have less than 20% ownership of the home, so they'll force place an additional cost called mortgage insurance premium, and it's a upfront fee if it's a FHA loan, where you'll be paying an upfront fee, and it's also a monthly fee that you pay until you get that equity in the home. So they're saying that this program, or the fee that they have to pay out, they can apply it towards mortgage insurance premiums. So we're going to make sure we're doing our due diligence. I'll be on top of it as much as I can to bring awareness as to if they're being held accountable for doing any of these deeds: lower rates, down payment assistance, closing cost assistance, payment of initial mortgage insurance premiums. That's a huge. Some people are paying $300 and $400 a month extra because of MIP. Sometimes it's two. I mean, they've done a lot to lower it at this point, but people are paying a couple $100 extra a month just in mortgage insurance premiums because they don't have the 20%. See, when you take advantage of those down payment assistance programs or FHA, where you're paying a little bit less down, you may have to pay what's called or considered mortgage insurance. And like I said, it's not your homeowner's insurance. You're insuring the bank in case you default. In case you default, they can file a claim with the FHA or with Fannie Mae, Freddie Mac. They'll file an insurance claim because you've been paying their insurance for being a risky borrower. So they pass that fee to you. I bet some of y'all didn't know that. And that probably hasn't been explained to you like that. Don't worry, I'm here to help you out. All right. They also were ordered to conduct a detailed assessment of its fair lending program in Miami MSA, specifically as it relates to fair lending obligations and lending in predominantly Black Hispanic neighborhoods. All right. They are ordered to enhance its fair lending training and staffing. Um, so that's to ensure that there's equal access to credit and it's provided across the mortgage firm's market area, including maintaining a director of community lending. And as we saw when they did that with Ameris Bank hired a joker who had never even did mortgages, didn't want the job, and wasn't looking for the job. And the CEO hired them anyway. The individual didn't close not one loan, not one loan. So when they were ordered to do this, they still fumbled the ball. Ameris Bank fumbled the ball. So let's see if the mortgage firm fumbles the ball. Because when a good old Ameris Bank hired somebody to do this same stuff, they hired someone who had no experience in even doing mortgages. And that person didn't do not one loan. And Ameris Bank didn't do one loan in Jacksonville. And it looks like, I mean, the mortgage firm they did more than one. But when your area is 64% Black and non-white, and you barely are doing any applications, I mean, it's nasty work, man. It's disgusting. That's disgusting. That's Sour Patch Kids. All right, so they also need to expand outreach and advertising efforts by maintaining an office location in a majority Black Hispanic neighborhood in Miami-Dade, translating its website into Spanish, and requiring all of its loan officers in Miami MSA to engage in majority Black Hispanic neighborhoods. And that's all well and good, but okay, so if you put a neighborhood or a bank in a neighborhood that's predominantly Hispanic and the websites are in Hispanic, what about the Black folks though? Because not all of them speak Spanish. Not all of them are speaking Spanish. All right, so let's make sure that we are helping those that need the most help are getting the most help. All right. So that's cool, but they got specifics for the Hispanics. Let's make sure there's some specifics for the blacks as well. All right. Let's make sure there's specifics for the blacks as well. Bolster connections with the community and build referral resources in predominantly Black Hispanic neighborhoods. All right. The Justice Department opened its investigations to the mortgage firms' lending practices after receiving a referral from the Consumer Financial Protection Bureau. This settlement marks the Justice Department's 16th redlining settlement under the Combating Redlining Initiative and the third non depository institution to reach a redlining settlement with the department. Non-depository lenders, which are not traditional banks and do not provide typical banking services, engage in mortgage lending and now make the majority of mortgages in this country. Under Combating Redlining Initiative, the department has secured over 153 million in relief for communities of color that have been victims of lending discrimination. This historic amount of relief is expected to generate over 1 billion in investment to address unequal access to credit in communities of colors. A copy of the complaint and proposed consent order, as well as information about the Justice Department's fair lending enforcement work, can be found at www.justice.gov/fair housing. Individuals may report lending discrimination by calling the Justice Department's Housing Discrimination Tip Line at 1-833-591-0291 or submitting a report online. And this is vital. If you feel that you've met with a lender and you were dealing with any sort of mistreatment, you need to make sure you blow this hotline up. Because I was looking at a case, and I'm going to get into that case, but we keeping that one in the tuck for a little bit. But there was a case where a woman in Colorado was discriminated on by her appraisal by over $200,000. Her home was appraised at nearly $1 million, and somewhere out of the blue, not even a year later, a company says their home is only worth $600,000. That's a huge disparity. And she filed a complaint, and a lawsuit was filed against that company. And like I said, I'm going to keep it in the tuck, but stay tuned because that one's a little closer to home. A little closer to home for me. But oh yes, and this was done 2021. So a lot of these cases are a lot more recent than folks would like to think. But if you ever see any of these things going on, any lending discrimination, because you are protected by the Equal Credit Opportunity Act, you are protected by the Fair Housing Act, where you can bring this to justice. And you don't have to spend your money to bring this to justice. All you got to do is hit up this tip line. So all you got to do, you hit up this tip line, you explain the case, and an investigation will be launched if it's a real case. So trust and believe that. All right. Trust and believe that. I did want to hop back into the court paperwork, and I'll only go maybe another page or two, and we'll maybe have to do a part 3, part 2 and 3. But I just wanted to go into a little bit more, just so folks can actually have, like I said, have some more understanding. But there were some very interesting remarks and emails that I want to dive into from the court case. So I'm going to skip down to page 14. So forgive me for those of you, and I appreciate everyone who's stuck around. I know there's folks that got things going on, so trust me, I'm not, at all tripping on that. But I appreciate those who have stuck around and who are checking out what's going on here. All right. But taking a look. Hold on. Let's bring up the complaint. Taking a look here. All right. The mortgage firm's employees exchanged emails indicating racial bias and discrimination. See, this wasn't in the article by the DOJ, but this is in the paperwork. This is what the papers say. This in the court filing, January 7th, 2025. the mortgage firm's employees exchanged emails indicating racial bias. See, all these things are tracked and documented. So from at least 2018 through 2019, the mortgage firm's employees sent and received emails that indicate potential racial bias, disparagement of communities of color, and or an intent to discriminate. These emails included statements implying a reticence to provide lending services to or work with borrowers in majority and in majority and high black Hispanic neighborhoods. In at least three instances, loan officers of the mortgage firm made derogatory references to majority black Hispanic neighborhoods as ghetto or the hood. In an email exchange between a non Hispanic white loan officer from the mortgage firm and an outside title agent, the agent sent the loan officer a real estate listing for a duplex in West Palm Beach, which is a predominantly black Hispanic neighborhood. The loan officer responded with ghetto. The same loan officer from the mortgage firm wrote to the same title agent regarding an event at a golf entertainment venue in a majority white area. Was thinking that for the team. These Jupiter realtors don't want to go to the hood. In an exchange between a non-Hispanic white loan officer and a non-Hispanic white regional sales manager, both from the mortgage firm, regarding a comparable property used for an appraisal in Broward County, the loan officer wrote, I've lived in Hollywood for over 20 years. This comparable is in the hood side of my town. My home closed in March for 680K and is a block away from the property in question. Value is there, just need a different appraiser. The loan officer who exchanged the first two sets of emails still works at the mortgage firm, but the loan officer was not disciplined in a timely or meaningful manner. The mortgage firm gave this loan officer only a written warning for these emails over 9 months after the emails were brought to the mortgage firm's attention. The employees who exchanged the third set of emails no longer work at the mortgage firm at the time the emails were brought to the mortgage firm's attention. So they weren't working there before it was even brought to them. So I'm sure they weren't fired with anything to do with that. That had nothing to do with their termination. I can assure you, because it would have been mentioned in the court paperwork. So it didn't have anything to do with it. But when they launched the investigation, they were bringing these things to their attention, and they're trying to clean things up as much as possible by issuing out written warnings, which is just a slap on the wrist for people saying all sorts of derogatory things about redlined areas. On at least two occasions, a non Hispanic white loan officer from the mortgage firm sent emails including the N word. They out here dropping N bombs, y'all. This in the Department of Justice versus the mortgage firm. The Department of Justice has picked up emails from a non Hispanic white loan officer from the mortgage firm sent emails containing the N word. In an email from the loan officer to an outside vendor to create banners, the loan officer wrote, working on it now, my N word. The same loan officer emailed the same vendor with signs for your favorite NIGGR. The vendor responded, send me consent and electric file for your logo, my N word. Now, this is interesting that white professionals are emailing each other talking like this, because as long as I've been in the mortgage industry, banking and finance industry, and when I was doing recruiting for loan officers and other professional positions, I've never emailed colleagues using the N word. And I'm black. It's just a lack of decorum and professional, overall tacky. I mean, you're emailing about sending over title work. You're emailing about marketing materials, and you just got to throw in the N word right there. And I know the excuse will be, well, it was white folks talking to white folks. It doesn't matter. That's a lack of professionalism. The mortgage firm did not discipline this loan officer And another thing, you're sending this to folks that aren't even in the company. Look how you're representing them by reaching out to vendors about marketing materials, saying, "Send me the electric content, send me the content and electric file of your logo, my N word, my NIGGR." Why would you be talking like this when you're asking for professional marketing logos? That's just nasty work. Just nasty work altogether. Disgusting. All right. The mortgage firm did not discipline this loan officer, who was among the highest producing loan officer, a go figure, in the Miami MSA, in a timely or meaningful manner. He was only given a written warning for these emails over 9 months after the emails were brought to the mortgage firm's attention. So, yeah, you producing a lot where they're not tripping on you. The mortgage firm did not adequately monitor redlining risk or enforce fair lending training requirements. During the relevant time, the mortgage firm's compliance department lacked adequate internal fair lending policies and procedures, and thus failed to ensure that the mortgage firm provided equal access to credit access to credit to majority and high black Hispanic areas of the Miami MSA. Before 2020, the mortgage firm did not conduct fair lending assessments to identify redlining, and it did not conduct regular evalu. It did not regularly evaluate its compliance with the FHA or ECOA. The mortgage firm did not analyze its mortgage lending data until mid 2020, after the Consumer Financial Protection Bureau, that's CFPB, notified the mortgage firm that it would conduct a fair lending examination, and did not begin addressing redlining in the Miami MSA until after the CFPB informed the mortgage firm that it had found evidence of redlining. So they're trying to CYA after the fact. Nasty work, sloppy work, really. So their count one was violations of the Fair Housing Act. Let's get into 79. The mortgage firm's actions, as alleged herein, constitute discriminations on the basis of race, color, and national origin in making available residential real estate related transactions, or in the terms or conditions of residential real estate related transactions, in violation of the Fair Housing Act 42 and its implementing regulation. All right. The making unavailable or denial of dwellings to persons because of race, color, and national origin in violation of the Fair Housing Act and implementing its regulation 24 CFR, and discrimination basis on the basis of race, color, national origin in the terms and conditions or privileges of the sale or rental of dwellings or provision of services or facilities in connection with the sale or rental of dwellings in violation of the Fair Housing Act. So I mean, they were in full. They did ultimately they denied blacks and non-whites the opportunity, the equal credit opportunity to mortgage lending. And the violation is a pattern or practice of resistance to full enjoyment of rights secured by the Fair Housing Act. So understand, anytime you're being denied your rights to full enjoyment, of your rights by the FHA, which is Fair Housing Act or Equal Credit Opportunity Act, you need to be bringing that to the attention of the Department of Justice. You can bring it to the attention of the Consumer Financial Protection Bureau, and you can bring it to the attention of the NMLS, the Nationwide Mortgage Licensing System. All right, and we're going to go back into the case. Like I said, I'll probably do a part two, but I want to show you all again. I like to show you all how you can pull up the NMLS, right? Let me share my screen real quick. All right. So whenever this is mortgage. This isn't just any banking thing. This is just when it's mortgage. All right. So you go right here on NMLS Consumer Access. You can type that in. Okay. All right. Here you get Consumer Access. It's free. And let's look them up. the mortgage firm. Let's see if they have any regulatory actions against them. All right, you just got to fill out the security real quick. And here we go. We're going to click company because we're looking up a company. You can look up loan officers too. All right. And they said they had other aliases. Where's the mortgage firm? Here's how we'll do this. The Mortgage Firm Inc. NMLS. It's the same one. Let's see. Yep. Altamonte Springs. Where's their NMLS at? Right here. 189233. All right. Here we go. All right. So this is the mortgage firm. So you can look up any company that you're working with. You can see who you can reach out to here. You got their numbers, facts, addresses, what states they can do business in, and what types of business they can do it in. All right. This is on the NMLS Consumer Access. All right. Let's see if they have any. They don't have any regulatory actions as posted to the MLS. Very interesting, as you had to do a settlement with the Department of Justice for redlining. So you should have some regulatory actions to show that spanking. But for some reason, they don't always pop up here. They do for a lot of individuals, but they don't always pop up here. So they have 194 loan officers. That's what an MLO is, a mortgage loan officer. All right. And their state and licenses are 39 total. And right now they're only displaying 26. But as you can see, if they're authorized to conduct business or not, it'll show. Okay. It'll show. So if you see a no, then you know they shouldn't be doing anything with you. If you're in an area where it says no, then you need to be reporting that. You need to be reporting that. Okay. But this shows you everything you need to know. So always use this as a point of reference. All right. Because we want to be constructive. So you see the mortgage firms here, you put in their NMLS ID. You just Google whatever company is and you Google what their NMLS ID is. You hop on a consumer access and you put that in there. If you're on the phone with a loan officer and you feel uncomfortable, ask them for their NMLS ID. You type it in right here and it'll show you what states or they're licensed to conduct business in and if they even are licensed. All right. All right. All righty. So I hope this has been constructive. And I hope this has been information that you can use, as the goal is to help prepare and give you a better understanding of financial literacy as it pertains to mortgage banking. But I will be going over the next part of the court case, and we'll also be breaking down good old Overtown, another Black affluent area that was deemed hazardous by the HOLC, and how their affluence was brought to an end by the implementation of the super freeways, I-95 in particular, and how it was ran through that neighborhood. Like I said, there's Black Wall Streets in more neighborhoods than just in Tulsa, Oklahoma. Make no mistake about it. And we'll be going city to city, showing and bringing awareness to how these HOLC maps impacted Black non-white communities and still impact them today. And that this wasn't a coincidence, but actually a designed attack on Black folks. It was a designed attack. And it's not that you go out hating others because of this, but you need to know your history to ensure it doesn't repeat itself again. And these maps were set up. Like I said, I'm going to always refer to them because this is our bread and butter. This lets you know what happened, why these communities had crack houses in them, why these communities are food deserts, why there's all sorts of hazardous plants in these areas, why there's no healthy food options. This was a map legend that was created by a government agency called the Homeowners Loan Corporation. And city to city, they set up redlining to avoid They called it hazardous, but that was a code to ensure that you didn't put any resources in these areas. And they, in fact, most of these areas that are labeled red at one point or another had some sort of expressway ran through it. Had an expressway ran through it. And then if they couldn't do anything about that, they used what was called eminent domain and demolished the places there. And it wasn't because these areas were crime ridden at the time. That's not the case. These areas were actually affluent. They couldn't believe that blacks at the time had only been removed from slavery from like a couple decades at most. And they already had built communities of abundance. They had their own hospitals, they had their own doctors' offices, they had their own lawyers, they had their own banks, they had their own insurance companies, they had their own transportation companies, bus lines. Like we talked about in Jacksonville, Sugar Hill, they had a streetcar railways where they had a railroad riding you from Sugar Hill to downtown. A railway where people who didn't have a car could hop on the railway right there in Jacksonville, Florida, Duval County, and beeline it to downtown. And how could a community who's been out of slavery 10 to 20 years already have all of this going on? And you got white communities still living in shotgun houses, communities. So they created these maps and ensured that they would squeeze you out of economic growth, of generational wealth. And they also went in and they demolished the places. They also went in and when they would use eminent domain to put a plant, eminent domain to put a freeway in those areas, eminent domain to take over the hospitals. They did everything they could using these maps, city to city, using these maps. The mapping of inequality, the racial discrimination maps. And this map here is about Miami. Like I said, we'll be going over the Overtown district, the Overtown neighborhood, and the affluence that was there in Miami. We'll probably talk a little bit about Liberty City, Brownsville as well. But again, I hope you found that this was constructive and you got any constructive value that was needed. I do have to run, but again, we're out here sowing seeds of equality. That's the term for this week, seeds of equality. So please like, share, subscribe. Please show your friends, family. And again, if you find any lending discrimination practices, be sure to report that to Department of Justice or the Consumer Financial Bureau. You can run this back and look at the number. I'll probably post it on my on our Twitter, which is So In Seeds TV. But I do appreciate you all's time. Looks like we had quite a few in here today. I thank y'all for that, man. I appreciate that. But again, thank you. And we'll be back tomorrow. Have a good one.